So let's take a look together at exercise 8-9 on page 256 of your chapter 8. It's the last exercise that you do, and it's a hodgepodge of things, but first pointing out that you're working with a perpetual inventory system. And someone asked me this morning, why would you bother with these entries if it's a perpetual inventory system? Because in reality, a computer is taking care of all of these entries. And in fact, that is correct. But it's good for you to understand how the computer is actually taking care of things. And even though the computer is taking care of the inventory, you still have to keep a record of what was sold, how much did it cost when you bought it, what things were returned, and so forth. So doing this exercise 8-9 just as kind of a practice to see what the computer would be taking care of in a perpetual inventory system. Now to finish this, or to even start this problem, myself, I went back to page 250, which I'm sure if you have already looked at this problem, you've looked at this, and I reviewed the difference between the periodic inventory system and the perpetual inventory system. And with the perpetual inventory system, as described in the paragraphs on the top of page 250, you're looking at a larger operation that has an immediate count of what's in their store at all times. You know, as consumers, we depend on that now. When you shop online, you can see immediately if the shoes that you're looking at are available, or if there's two left or something like that. You see this perpetual inventory system in progress when you are shopping online, if the place you're shopping tells you what things are available. So yes, it's used in larger operations. What we've done up to this point was end of the month things where you would actually count your inventory. So a smaller one-person show kind of a business, if you'll think of it that way. All right, so let's just nail these 4 transactions together. So on July 3rd, so we're the Fine Fashion Outlets, we purchased dresses for $3,500 plus a freight charge of $120 from the Fashion Expo. So we are in the business of selling fashions, and we are purchasing some inventory at this point. All right, so what I did, just to make it easier on myself, was just flipped to page 250 and found the example there. The first example in the book is for June 20th, and it shows you the difference between the periodic system and the perpetual system. So we're going to kind of copy what they've done on the perpetual side, so you can see that we're going to debit merchandise inventory, and we're going to credit accounts payable and the individual account. We are going to add in the freight. Okay, so let's see, merchandise inventory. And that debit is for $36.20. And then our credit is going to be accounts payable. And then we have a subsidiary account that we will record with that as well. And that is Fashion Expo. Same amount. Okay, the book told us we did not need to write explanations there, so we'll just move on to the next entry. The 5th of July. The directions say we sold 2 dresses on account to Alice Chu. Terms were net 30 days. We issued sales slip 788 for $600. The cost of the dresses sold was $400. Okay, so in reality, we would maybe be using a sales journal if it was a smaller business, but this is a larger business with point of sale computers. All right, so here's the accounts that will be affected with this. So selling dresses on account, that means they're not paying us today, they're paying us later. So accounts receivable. And the subsidiary account that goes with that, Alice Chu. And we put the full sales price there, $600. And this is going to be a double entry or compound entry, but we need to credit our $600 to sales. And actually those should be indented, but we'll just pretend they're indented. Okay, the compound portion of this entry then is we already debited and credited the full amount of the sale, but we have to take it into account what we paid for that item. So here's where we do that. So the next portion of this entry is the cost of goods sold, and that was shown as $400, and the credit on that is merchandise inventory. So we have $400 less of merchandise inventory. And if you just look at this, you can see that you made $200 on that sale. Okay, that would be your net income on that one sale. Okay, next item 7, or item from July 7th. We received a credit memorandum for $550 from Fashion Expo, the people that we purchased from on July 3rd, for damaged dresses returned. The goods were purchased on invoice 101. Part of the problem, I think, with these transactions is just wrapping your head around who's selling what, who's getting what. We purchased dresses prior, and when we got them, 2 of them or whatever, some of them were damaged. Okay, so these are dresses we intended to resell to our customers that we could not. So we are getting a credit back from our from the company we purchased them from. All right, so in this case, we kind of we kind of do the original purchase upside down. So looking back at what we did on July 3rd, we kind of do that upside down. So we start with accounts payable and Fashion Expo. And that return was for $550. And the credit is merchandise inventory. Okay. And the last transaction was on the 9th. We accepted a return of a dress from Alice Chu. The dress was originally sold on sales slip 788 on July 5th. We issued a credit memorandum for $200. The cost of the returned dress was $135. Okay, so the customer paid $200. We paid $135, so there was a markup there, obviously, and we need to kind of now do the entry that we made on the 5th. We kind of need to do this one upside down now. So here we'll go. All right, so first we need to use a new account for sales returns and allowances. And we put in the full amount of $200. The credit we use on this one is accounts receivable, because we are no longer going to get that money from Alice. So we are reducing accounts receivable for the amount of the dress. And then we also need to take into account the merchandise inventory and the cost of goods sold. So now we're taking, basically we're looking at the 5th, we're turning this entry upside down, and we're going to debit merchandise inventory for the cost to us of that dress was $135, and we will credit cost of goods sold. So I hope that helps you understand this exercise just a little bit more. I think looking at the differences on page 250 in the table they've got there, looking at the difference between a perpetual system and a periodic system might help you grasp this a little bit more. But I wouldn't worry about memorizing what you've learned in this section. The It was an exercise to help you understand how the computer programs and the accounting programs would take care of the accounting in a perpetual system. Next time you go to Herberger's or Macy's or a big department store where they offer discounts, sales, and whatnot, pay attention to your receipt, because you will see not these exact accounts listed, but you will see a little bit more that should help maybe understand what we're talking about with this perpetual system. All right, guys, good luck on finishing your exercises and doing problem 8.4. I'll be checking my email a little bit this weekend. I hope to be doing a little more grading. See you soon.